is July 17th. It's just a little bit after 12 noon on Thursday. It's about 17 minutes after. And again, we want to thank our friends at FEG Token and smartdefi.com for all of their support. And of course, BYDFi Exchange, BYDFi. And you can find a link to BYDFi Exchange on my X feed or in my YouTube page at Blunhouse TA. And every session we'll give away 2 trading bonuses of $50. You just have to be registered under our link to win. And I suggest you give BYDFi a shot because it's probably one of the slickest exchanges you'll get a chance to trade on. It is clean and easy to look at. The user interface is really nice, and it's quick too. So it's all the things that you would want an exchange to be. What we're going to take a little bit of time to do today is that we talk about fibs, fractals, and filters, or at least I do. And it's kind of the foundation of how I tend to look at a chart. And it's basically, hopefully you can see this on your screen. And if you can't, this document you can have if you would like. Just reach out to me and I'll make sure that you get it. But it just basically is going to walk you through, or us through, what we're talking about with fibs and fractals and filters and why we're using them. But it really is the foundation for, again, how I tend to look at a chart when I analyze it. It really is the foundation of my market analysis, and it is a structured approach. And it's one of the things that a lot of traders experience without realizing that it's a problem. You don't have a structure and a methodology around your trading. Looking like something wants to go up or down is not a methodology, right? It might be intuition, but it's not methodology. So using this methodology, it gives me the ability to look at a market in a structured way. And the reason that's important is because every time you look at a chart, if you look at it through a different set of glasses and a different set of criteria, it just gets confusing and lost, right? Plus, it gives you an opportunity to get really good at what you do, right? That's why we practice and repeat, right? So much of this is repetition and learn by doing. But if you're going to repeat something that's structured and proven, and I think you'll get a lot farther ahead, right? It helps with pattern recognition, right? Now, I don't like to say that, double tops, double bottoms, head and shoulders, inverse that, this, that, and the other thing is the be all and the end all, but it's important. And it factors into how I look at the chart, certainly. Double bottoms are meaningful, double tops are meaningful, but there is other analysis involved around whether or not they play out the way you think they are. And this also helps us with watching money flow. When does it come in? How does it come in? When does it leave? Where does it leave? Right? All of these things are important because over time, you're able to get the ebb and flow of the market. Again, it's like the race car driver in the cockpit before the race starts, right? With his eyes closed and the head swaying back and forth because they're literally driving the track in their minds. That's how I want you to feel about your charts, right? It's a track that you can work your way around instinctively. You don't even have to be on it to feel it. It's more of a feeling. When we're looking at timeframes, which we talk about all the time in here because that's a big part of fractal analysis, different timeframes will allow us to see different types of formations. So when we're looking at monthly timeframes as examples, those are usually showing us major structural levels, changes in trend that are incredibly meaningful. It might be cyclical, right? The weekly time frames, I like for longer term swing trades because they have a tendency, if you catch them at the right time, to run the way you want, up or down. And then the daily, we know what we get on the daily and less. right? Anything less than that, you're literally day trading. But those are the things you're going to see: monthly, major structural shifts, trends, and cycles. The weekly I love for longer swing trades. What are we seeing in the monthly? And we're going to look at a chart today too that actually kind of speaks to this, I believe. And we'll talk about it shortly. So we're going to see these major support and resistance levels on the monthly time frames, right? They are areas where institutions might be showing us their cards a little bit because they're, again, longer term charts, and we're going to see these moves over a longer period of time. And there's no doubting when money comes in and money goes out on a monthly chart. Right? That's what we're going to find there. And the chart we'll show later on might speak to that a little bit. This is what you're really seeing on those weekly time frames. Right? And again, I like weekly charts. I think if you really want to get an understanding of trend, the weekly chart is very helpful because it is filtering the noise, right? It's giving you, hey, you can have a daily chart and have 4 or 5 red candles and it feels like the world's over. But on the weekly, that just might be a pullback to the T-line, for example. So these are the things that we use to help keep us in the trades once we're in them and on the right side of them. Okay? On the dailies, what are we looking at? Well, we're getting a little more finite, aren't we? Right? We're looking at shorter term structures, but we realize that everything is fractal. So setups that we see on a monthly or weekly chart can just as easily appear on a 15-minute, a 1 hour, or a 4 hour. We understand that. But what we understand also is when you're working off smaller time frames, you have to adjust your stop loss levels and your expectation for profitability. So the shorter you get, the quicker you need to be prepared to take your profits. If you're working off a tick chart and it goes sideways on you and you're leveraged, you're done. That's an example. Okay? What does this give us? What do these fibs, fractals, and filters do for us? Well, they help us understand where we're going to find those high probability zones, areas to buy, areas to sell. We're going to find the sweet spots. And again, using multiple time frames will show us, for example, I was talking to someone earlier about something that we saw on a daily chart. But if you really wanted to pick up the big move that you saw today on the daily chart, you really had to go back to the 4 hour or maybe even the 1 hour to start to see the breakdown in advance. So that when that big red candle does show up, you're already in. That's what this helps us do. And what it does for you is it gets you on the right side of the trade at the right time. Well before everyone is talking about whatever happened today that sparked the candle on the chart. If it was long, you were already long. If it was short, you were already short. That's what this helps us do. Because again, at the end, what do we have? What's our job? One job. Monetize the chart. Now, does that job include more than one element? Yeah, sure it does. Risk management's a huge part of it. Like, it's one thing to monetize the chart, but we don't want you to give it back right away either, do we? That doesn't really help you. Monetize the chart and manage your risk. Now, when we use Fibonacci's, which I like to do, and look, I'm not a Fibonacci expert or anything like that, and neither do you have to be. But like at a bare minimum, we need to understand the retracements and extensions. So if we've had a big move high, what do we want to know? Okay, the breakdown looks like it's begun, so we're obviously going to connect a swing low to a swing high because we're trying to figure out where that retracement might go. And we know that 618 level is a place that kind of likes to hang out at. Now, Fibonacci's get really spooky. Like, at the end of the day, I don't think anyone can really explain why and how they work, and there's so many theories, but it's all we know is they work. And sometimes to the penny. But you know what? The bots know that too. But there are things that the market tells us well in advance. So like we just explained, having the ability to identify through fractal analysis when a breakdown is happening before it really happens on the rest of the world's screen. Right? That's a huge advantage. So now we're in early, and let's say we're short. Let's say we're at the top of a run and we want to short the retracement. Well, we're in early. Like, we're not in on the big red candle down that everyone's talking about. We're in 3-4 days before, as an example. But we want to know where to get out. Well, we would look to that level of a retracement as a reasonable place for price to come to, and we would plan our targets accordingly. That's one of your edges, if you want it to be. Helps with risk, helps get you in at the right time, because we know how to pick up reversals, and it gives you an idea of where to get out. And it works when stocks go up, and it works when stocks go down. Right now, and the third element is just the filters. What are the filters? Well, they're a little harder to define. And the filters that I use anyways, a lot of them go back to the late 1800s. Like, where most of our financial math kind of goes to. Right? Like, we have the founders of financial math, and this is one of them. Louis Bachelard. I've probably spoken about him before. And as a young man in Paris, he was fascinated by stock markets. He would hang out at the Paris Stock Exchange just for fun. But he grew up to be a mathematician, which kind of was born out of his fascination of markets. And when you hear about the random walk theory, it was Bachelard who created that. The theory of Brownian motion goes all the way back to the 1900s. Right? It was in it was within his theory of speculation, which he actually didn't get credit for until years and years and years later. But it's his math is really the reason why we have ETFs and mutual funds and indexes today. But one of the things that would drive Bachelard nuts was the way that price would move randomly up and down. And he originally felt that that was irrational, only to discover later that all of that noise could be filtered off a chart through different means. When I talk about the momentum bands that I put on my chart from time to time, they are literally based off of Bachelard's math. And what I'm going to do is, let me show you. So on this chart, let me take off this, take off all our signals. There we go. Hopefully you guys can see this. This is the Bitcoin 12-hour. Let me just go to the daily. And all that's on this chart are candlesticks and what you see here. And I call those momentum bands. Now, those momentum bands are basically just altered Bollinger Bands. That's essentially what they are. Mathematically adjusted Bollinger Bands. But they are adjusted based on the principles of some of Bachelard's studies and theories that were there to filter noise. So he did not like, when he would look at markets, all this up and down stuff, right? Thought it was irrational. Big moves down, big moves up, big moves down, big moves up, big moves down. It was crazy to him at the time. But what he realized is that, so when we talk about red candles in uptrends and green candles in downtrends, he realized that that was just normal. It was the market's way of dealing with irrationality. But what he wanted to do was make some sense out of it. And this is a weekly chart of Bitcoin. These momentum bands, as you see here, are tight, so they're just a sign of consolidation. But when price trades outside of the upper momentum band, you're obviously you're bullish. Notice how when it goes sideways here, it stays within the bands, so the trend is intact. This is another filter that I use to determine which direction price is likely to go. Just like we use the 5 EMA and the T-line, this is another tool that I use. And again, they are just mathematically adjusted Bollinger Bands, because at the end of the day, what do Bollinger Bands give us? Maybe I have to add them to this chart. All right, so those are the Bollinger Bands. Massive, massive wide spreads that, what is that really telling me? Not a lot. It tells me a lot more now. I'm interested in the trend. Is the trend up or is the trend down? Am I trading on the south side of these levels? Do I break these bands here often? No. Look at this one. Nice and smooth to the upside. Points and flats show you changes in directions. Like here's the thing going flat, so you know it's changing. Simple. And it's all based off of what Bachelor had created 100 years ago. And still relevant today. Rick Martinelli from Stocks and Commodities magazine basically tested this very same thing. I think it's from a 2006 edition. Using almost exactly the same parameters. And furthermore, if you get a green candle, let's just go to a daily because, oh, here we go. This here. Rick Martinelli was able to demonstrate that a green candle at the 50-day moving average and a breakout of this level had like a 98% success rate and achieving certain levels of profitability. I can't remember exactly what it was. So you guys, I tell you about how I like to buy off the 50, right? Does it happen all the time? No, I don't always get that lucky, but I like to. But a candle off the 50 on a momentum, off the momentum breakout bands as well, yeah, I get excited about those things. So this is just another, and again, it's a filter, right? Fibs, fractals, and filters. That's basically the foundation of what I'm doing. So it's really not all that hard, right? And what am I talking about when I was showing you that long-term chart and we talk about trends? So let me take the volume profile off. Put back on, okay. Now we're going to go to a monthly chart. And this monthly chart is the 10-year treasury, 10-year yield. So in other words, this is kind of the thing that's interest rates are going to be glued to. And when you're looking at a monthly chart, we know that, like we just showed on the other presentation, that you're looking at structural type of situations off a monthly. Trends, cycles, institutional positioning. This is the 10-year yield. And the 10-year yield wants 5%, according to what I'm seeing. And the reason I added, there's a couple things on this chart. The pink line is the 500-day moving average. The amber line is the 1,000-day moving average. Now, on a monthly chart, that 1,000 days represents 80 some odd years, 83 years. The 500 is 40 some odd, 43 years, 41 years. Is that structural? Is that a major trend? Yeah, it is. And I think that's what you're seeing. That's what the chart is telling us on the 10-year here that you're looking at. Why am I a little more certain that we're heading up there? Because just like when we look at charts of Bitcoin on any time frame, one of the things we look for is support at the 20-day moving average, which we're getting. And we're getting consolidation at that level. So we made this big run up from, next to nothing all the way up to 5 earlier in late 2023. And then we didn't break down. Is all we did on the monthly was come back to the 20 and get a continuation. A little bit of a break from it here, but we pop again. Again, not a breakdown, just sideways. But we're still trading above the T line, above the 5 EMA. All the metrics that we use on short time frames, we can use on the long ones. And this is a draw for price. Price has been here before, going back to this double top. Way back in 06 and 07. And I feel very comfortable that that's where this wants to go. If this was a breakdown of the 20, we'd be having a different conversation, but it doesn't appear to be. It is not breaking down. It's almost like it's waiting for the other shoe to drop. But I still believe that it wants these levels. And, for a lot of you, 5% sounds like a lot. 5.5% sounds insane. 6 or 7, people want to jump, right? These are normal. It's the reason it feels crazy is simply because they've been so cheap for so long, right? And our reality is that if you were 15 years old in 2008, how old are you today? Early 30s, something like that. And your whole adult life, for the most part, has been based around support for markets, quantitative easing, bailouts, money printing. Not that those things didn't exist before, but the scale at which they did was insane. But that's not normal. And at some point in time, rates were going to come back up to a reasonable level by normal standards. And I don't believe that, no matter what anybody wants, rates are going to come down by 3% or 300 basis points. I just don't see it. Doesn't sound reasonable. I don't think it's reasonable. And although there's pain that comes with rates going here, it's essentially a normalization more than anything else. And that's what the monthly chart will tell us. It's showing us what we talked about earlier. It's showing us maybe the institutional positioning. It's showing us cyclical looks. It's in giving us trend, but over a long, long time frame. 40 years, 80 some odd years. That's what it's drawn to. Current price is looking for past. Here's your past price. Now we can come back in 2 or 3 or 4 months and see where we are. But right now, I have no reason to believe that's not what it wants. 5 and up. Will it stay there? I don't know. I'm just saying that's where it wants to go. Right? That's what your monthly chart's telling you. And is there a message in that? Yeah. Right? There's a message in that. When you reach those levels on long-term time frames where you're where you're breaking past price that is decades and decades and decades old, there's a takeaway in that. And that it just means that there's a shift coming. And it's been well underway for a while. And this is what happens when we get too granular with our charts, right? You get stuck on a 5-minute chart and you actually never look at the daily, the weekly, and the monthly. That actually happens to people, okay? You don't want to be one of those. But this is what you see on the monthly. Okay? And if you guys have questions, just anytime, just bark them out, okay? If we go back to Bitcoin on our weekly, or let's go to our daily chart because it looks a little weak. This yellow horizontal line is the line that we connected off the 4-hour chart back here. That was the first time we drew it at that level. And here we are today. And we talked last week how, at some point in time, I think we were looking at the daily. Because that Tuesday, yes. So the way this chart was behaving, we thought, hey, it might pull back and tag the T line, but it doesn't mean that a trend is broken. Well, that's exactly what it did, and then price moved higher. Right? So it's just another example that you have all the tools you need to determine where price is going. Everything is fractal, doesn't matter what the time frame is. Just appreciate that things happen exponentially quicker on those shorter time frames. Do you still have divergence between your T-line and your 5 EMA? Yes. As long as you do, you're good. Bullish chart. There's a continuation, right? There's your move higher. You get a pull back to the 20 MA like we showed on the 10-year just a minute ago. There's your bounce. Didn't break here. This move down wasn't exuberant enough to change your trend. And what happens? You come back, bang, you bounce, and price goes higher. And it has yet to touch it since. Which is telling us we probably do have a little bit left. We're a little toppy here. What are we going to do? We're going to go to our 4-hour. Because how do we pick up these moves that we see on the daily in advance? We'll pick them up on the 4-hour chart or the 1-hour chart. Let's throw on our volume profile because that'll show us where we don't have a lot of support. There we go. So if we look at that previous support and resistance level that we drew ages ago, right in the midst of this gap. So if we get a pullback and price breaks off the shelf and into this gap, well, there we have the upper value range just waiting to be tagged. These candles aren't going to hold up price on the way down. That's what this gap is created from, were these exuberant candles that are just filled with fairy dust and air and couldn't hold up a feather when they're tested. That's why these gaps are created, and that's why price hits them on the way down and falls right through, and on the way up, the reverse happens. They move up quickly. So you would be concerned that you break this level and start to slip into the gap, and price breaks down. Time and time again. Any questions on that so far? Here's the 1 hour. If you're trading a 1 hour chart, for example, how long do you think you would typically be in this trade? Does anyone have any ideas how long, you would hope to be in it and then be out of it? Anybody? Like for me, it's a handful of hours, and if it turns into a runner, it could be a day or more. That's pretty much it on a 1 hour chart. But what happens is that so many of us enter on a time frame, and then when we start to look at other time frames, how many times have you forgotten what you entered on? And don't laugh, because I know you've done it, right? Like, so
That was powerful, Blunt. The idea. How long would you tend to be in in a trade?
mhm.
You said in about an hour.
Well, on an
Um,
hourly chart, okay, I hope to be in it at least a handful of hours, if not, maybe a day or a bit more. That's typically the length of those types of runs. If I get into an hourly trade that runs for more than a day and a half or 2 days, that's a big, that's a major move. But
oh yeah.
I'm just using this Bitcoin chart as an example. You could enter anywhere up here safely. There's your confirmation. But, you've got maybe 5, 10, maybe 15 candles, right? So that's the better part of a day on that run, right?
Wow.
But if
Yeah, no,
you're,
that's helpful because yeah, there's times where I have entered in a trade in a short term, and I'm like, man, maybe I jumped it way too early, or it was not recognizing everything, and trying to stay in it for a while. Uh, but yeah, it's not necessarily the idea. So that's good.
well, I think sometimes what happens to people is that, they will enter that trade off of the hourly chart, and as the trade starts to unfold and they start to look at other time frames, their analysis on how they're looking at it changes. Like if, and I try really hard that if, let's say I'm off the 1 hour, at the end of the day, if I opened it on the 1 hour, I'm closing it off the 1 hour. Like I have an expect. This is a really good example of a nice move up. That's about 24 hours, roughly a day. So you traded on the north side of the T line and the 5 EMA for that period of time. I don't want this, right? I don't want the chop, just the breakouts or the breakdowns. Now, on a 15-minute chart, I might expect to be in that trade for an hour or few, right? That's just the reality of that. The 5-minute chart, even less, and so on and so on. But you can't have an expectation that if you entered off the 15-minute, that it was going to run in such a way that you'd be closing it off the monthly high or something. Like, you have to keep your perspective in check when you trade when you're trading different time frames. And when I go from trading longer time frames to shorter time frames, the biggest adjustment I have to make mentally is to close my trades and take my profit sooner. Right? I get off, like if I'm trading dailies and weeklies, believe me, you don't have the urge to close the trade as quickly as you may off the shorter time frames. Right? So when I drop the time frames, that's an adjustment that I have to make. Right? Oh, it looks like it's going my way, but I got to remember all my analysis is done off the shorter time frame, and I'm not going to get the kind of run that I might off the longer ones. So I have to make that adjustment. And that's kind of why I bring it up, right? Because I know a lot of you trade the shorter time frames, but you have to understand that the adjustment that you need to make is taking your profits sooner, not letting retracements eat up all of your gains and then put you underwater, right? Like, we don't want that to happen. So if you're trading the shorter time frames, just remember that you got to take stuff off quicker. And I think that'll help a lot. And everything else we do is the same, right? Like, okay, so nice move up, super flat consolidation, which is great to be able to read. Then you can see your breakout. We know that when you break one level on the way down, you'll probably find the next, right? Like all of the things we do when we're looking at price is still the same. We broke the 20, found the 50. First attempts typically fail. All the time. Again, we show this all the time. And after a while, you're going to think, are these guys looking at the same chart? What's the deal? No, it's just how price behaves. That's what matters. How price behaves. Now, if you're looking at this 1 hour chart, what is your upside opportunity? Your upside opportunity off this chart is that you hold the 20 and 50 and start to move higher towards the upper value range and take out this previous wave's high. That's your upside. Sideways risk, well, you could churn along the point of control and have the 20 and 50 meld in here for a while. That's the sideways. The downside risk is that you don't hold the 20 and the 50, and in that event, you would roll over and be looking to take out the previous wave's low right at the volume profile where you see this wick. And if that does not hold and you start to fall into this gap, then you have bigger problems. Then you're looking for this wave's low, which puts you ever so close to the point of the lower value range. But it is within that gap. So nothing changes in how we look at price. We filter noise. Like, that's what I enjoy about using the T-line and the 5 EMA, is it's another tool for me to filter noise. And it doesn't matter what the asset is. Just as easily be a stock. Right? This is Apple daily. These are all the things that you have to do, right? Find the breakouts, find the breakdowns. And when they do break out or break down, you have the understanding of how to know when trend is changing, how to find targets and areas of support and resistance. We know that current price looks for past. So just for example, kind of going to what we talked about a few minutes ago, this is your buy signal on Apple going back to the 23rd of June. And if you wanted to cheat, you could have picked it up the day before. But there's your confirmation. Now, if you're in on this candle and at no time, because you never had a break in that divergence between the T-line and the 5 EMA, you'd still be in this trade. You are absolutely 110% in the driver's seat. We get you in at the right place, at the right time, so the decisions that you have to make now are simply, how long do I want to stay in this trade? When do I want to take profit? How long do I want to let it run? And we give you the tools to figure that out. If this breaks out, right? What is it sitting on here? What has price been sitting on for the last few days? This shelf. It takes time for price to eat these shelves. The point of control is basically an example of the largest shelf, and that's why it takes so much time to break it up or down. If this thing breaks upward, it breaks into a gap, looking to take out, this is kind of a structural level, so let's just call this 215. Right? If it breaks out of here, it's got to take 215 in order to try and push for this high up here before it broke down. Where does that put us? Ironically, right into another shelf. And it does break trend at the same time to the upside, if that was to happen. If it fails, Whole other story. Right back down to the point of control again. In this area, because current price looks for past, so in the event of a breakout, it's looking for past. In the event of a breakdown, it's looking for past. This is a strong level to draw a price down. What can we use to try and determine where the momentum is? Just couple other indicators that anyone can pull out of TradingView, right? Which is probably one of the better platforms you could trade on. All the tools you could ever want are in there. Right? This first level is stochastic RSI. Well, the stochastic RSI, not that we live and die by any single indicator, but it is telling us that it might want to kick a little bit higher. Just one little signal. Our Fisher transform, however, is still completely diverged apart. Sometimes you'll start to see them come together, but right now this is telling us our trend is still down. And our MACD, moving average and signal line are well above zero. And as long as that's the case, more bullish things can happen than bearish. Have you had a little bit of a sag in your histograms and have your moving average and signal line sunk a little? Sure, but not broken down. So what do? We hurry up and wait. Right. Go to your 4 hour, maybe see if you can start to see any signals. And well, lo and behold, what do we have? We're starting to print today a buy signal on Apple. And interestingly enough, where did this move start really? Yeah, we're going to say back here. So you're in early, right? Again, our job is to get you in the trade before the rest of the world wakes up to it. And this is how we're doing it. Your stochastic RSI. Look how oversold it is. Same with your Fisher and same with your MACD. This is textbook, really. We talk about, find your ideal setup. This is mine. Be quite frank. Oversold, oversold. Momentum higher on the MACD. The stochastic RSI typically goes first, followed by the Fisher transform, followed by the MACD. That's why they're in the order that they're in. And now our script tells us a little bit earlier when we might be seeing an influx of cash to try and help us get, a little bit of a head start. But nevertheless, there's your confirmation candle on the 4 hour. And this move really takes off. It bases itself on the point of control. And we know at the point of control, you're either going to get a big move up or a big move down, or a significant one anyways. This one is quite significant. And boom, there we go. Keep an eye on 4 hour charts because they'll help you see that move on the daily just a little bit in advance to give you a step up and put you in the driver's seat a little bit early. And if our goal is to, we have one job is to monetize the chart, well, doesn't this strategy meet our objectives of monetizing the chart? Yeah, it does. And because you are in early, it gives you a better opportunity to manage your risk in this move. Right? Managing your risk here and managing your risk down here are two different things. We want to get you in the trade as early as possible to put you in the driver's seat so that you don't have to get stressed out 30 seconds after you hit the buy button. That's just an exaggeration, but I think you get the point. Charts don't lie. This was a clear signal to buy, and the 4 hour was even better. And you'll see this on anything you want to trade. Let's look at XRP today, just because I heard that it's gone off like a rocket ship. And we know what this is all about, right? This is all about being ISO compliant and having these coins be, the backbone of in some way of the future of finance. And XRP has always been said, and XLM and XDC and HBAR and There's a few others. But I think that's what's driving this. Right? But at the end of the day, I don't care. Like if you're a trader and you're trading this chart, and I don't actually, but if you are, this is the money signal, right? You're okay with these. You're okay with these. These pay as well, but these really pay. They're not all like this, but when you hit one and it runs and you actually know how to manage it, boy, are you going to be happy if you haven't already. The majority of the trades you make are going to be reasonable returns. And when I say reasonable returns, 20, 30, 40% based on how you guys trade, even with all the left that you use sometimes. But every once in a while, you're going to catch a runner, right? And when you do catch the runner, if we teach you in advance how to manage it, you're not going to poop your pants. And you're not going to make a mistake. You're going to be calm, cool, collected, and you're going to let the runners run. You're not going to let this red candle scare you out of the trade, or these two red candles scare you out of the trade, or God forbid, that doji scare you out of the trade. That's not going to happen, because you're in here long enough to know that as long as this divergence is intact, you're okay. And you were. And still are. Is it a crazy, bullish, exuberant chart? Yeah, it is. Will it eventually retrace a bit? For sure. But right now, it's bullish. And even the 4-hour, because we want to see if we can find anything, because we use fractal analysis on a different time frame. I'm sorry, but this is still a bullish chart. Even with this sideways action here on the daily, obviously that was still, didn't break any trend on the daily. So we're still holding the 5 EMA up here. Do I like these dojis? Not necessarily, but they could just be just go sideways until time and price come together, and boom, you get another leg higher. But we just let the chart tell us. Again, we're not here to front run charts. That's not the job, right? Front running is not the job. Following is the job. Just take the breakouts and the breakdowns. That's it. That's all we have to do. Here's ETH. We looked at it a few days ago. Was it this day? Yeah, on this candle here. Now, if we recall, watching these candles come back, remember, so they went parabolic and then they go sideways. When they don't break down like this, that's more bullish than bearish to me. And we talk about this all the time. And here we have that candle from Tuesday. It just basically worked its way back to the 5 EMA and the T line, and the trend continues. Now, is this a little gappy up in here? Well, does price like to be too far away from this level without connecting it? No. Would I expect it to want to come back a little bit? Yes. Right? Or time and price come together and they meet up here and the beat goes on. But just let the chart tell us, and when you're, if you really want to get a look on the shorter time frames, switch to the 4-hour. Right? The 4-hour, although you've had 3 red candles to retrace back to the T line, price is still sitting on the 5 EMA. We still have the divergence that we talk about. So fundamentally, this is still a bullish chart. Right? Now, you're big boys and girls, and you can determine, when to take your profits along the way. But we just don't want you having heart attacks every time you see a red candle in your long. Right? So you can manage these things better now. Right? And, for interest's sake, let's throw, let's throw some fibs on this chart. So here's our 4-hour leg higher. If this in fact is our top, and we're expecting price to break down from that point on, although right now it's still holding, but if it was to break down and this was the high, here's 618 down here at 31.43. And that would be a reasonable expectation of a place where price might want to come back to. And when you look at the chart and you see 618, what does it do? It cuts through the bottoms and tops of these candles in here. Price has been there before. Current price revisits past. And the chart will tell us if we're right or we're wrong. Right? But if you're already in this trade from the, from where you should be, you're in complete control with very little stress other than how much are you going to make on this trade at this point. Right? Get you in at the right time. Get you out at the right time. We don't see the 5 EMA flashing any red signals yet, even though we've had 3 red candles, which gives me enough confidence to hang around in this. And this is basically how I'm making my decisions each and every day. Right? No different than how I do if this was ETH or oil or a stock or anything else. The analysis is the same. Price behaves the same. Doesn't change. On some assets, it might be more volatile. It might move quicker than something else. Sure, that happens all the time. But the principles around how it moves, no. It stays the same. Any questions or any other symbols you want to look at? Because we typically have a few. Let's take a second actually and look at FEG if we could. What is this? So this is gate.io. So we know what happened here. Right? We don't have to really live that. We talk all the time about consolidation. And that eventually price will break out or break down. Right? It won't go sideways for forever and ever and ever. And the longer that it goes sideways, the move that comes out of it is usually pretty significant. So the longer you're in a consolidative period, the move higher, when it does come, usually has some legs. And you're finally starting to see on this chart, whoops, make it big enough for you guys to see it here. Here you have price really respecting that lower value range. It doesn't really seem to want to spend any time below there. But this is actually a nice move. And what you're hoping for here is this thing to continue to pop. I don't like the little gappiness here. Price might want to retrace and come back to that level, but it doesn't mean that the trend is over as long as that divergence is there, which it is. You could have a nice run here all the way up to test the point of control. This is obviously an area that has to be broken. You broke out of the previous wave's high on this move up. You broke that. Now you're at a structural level, which is why you're seeing resistance on this candle. So if you look to the left, you're going to see the bottoms of all of this through here. Right? That might take a little bit of time to break into. But when you do, what are you looking for on the way up? You're looking for the previous wave's high that gets you above the point of control. That's ideally what you want to have happen. And then you want to maintain trading above this level. Even on the retraces, you want to maintain that level. And then over time, because it's a dynamic range, it does change. But you want to break the POC and trade above it and hold it. If you, in the event of a breakdown, here, let's use our fibs again. This is a daily. Let's take the low. Let's take the high. 618 would bring you back down to, trying to read that, 7719, something like that. That's 618. Right? So if this is the high on this run, and you get a 618 retracement as a pullback, this is where you would expect it to go, right? But what doesn't it do? At 618, it doesn't return and take out the previous wave's low. And there's a difference. Now, this could be a 5-minute chart where we're working off a daily. So if you pull back and you hold 618 and then bounce again, that's another scenario altogether. That's a bullish trend. Move up, retracement to a 618 level, and then a move higher that runs and takes out that previous wave's high. That's bullish. And what you want is a few of those, a leg of 3 or 4 or 5. Move up, retracement, move up, retracement, move up, retracement. That's how you want to look at the chart. Up and to the right. So this is good news, right? This is a good move to get. Love to see it, take out that previous high, but it would have some work to get through this structural stuff first. That's why you're seeing the wick here. To be honest, it's just a level of resistance. Okay, break through it, chip away at this, and stay above it. I think you're in a good spot. The downside is you roll over and you come back and you test that level again. And then it's rinse and repeat. Remember, things want to go up 7 out of 10 times or something like that. So, just by sheer probabilities and statistics alone, price wants to go up. So, but I think that's what you're seeing is a nice looking move. Hopefully it continues. The resistance that you're seeing is completely expected at the level it's at. So I wouldn't be freaked out about the resistance you're seeing here. Completely normal.
Blunt House, good sir. Just want to say thank you for hosting this again and helping us out. If we could take a look, could we look at XLM real quick?
Yeah, love to. I was going to do that actually.
Yeah, I've been watching XLM for I want to say 7 years now, 6-7 years.
Yeah, I'll be really honest. Like there are times, even going back, to years before this, that price did nothing here, like on XLM for the longest time. Like I was interested in the concept of it, but I would just look at that and go, oh my God, it feels like it'd be forever, right? And it was. But here we are, and there's people that did really well by accumulating at those levels for a long time because they had the conviction to believe in this stuff. And just if you're not quite familiar, XRP is basically the finance element of blockchain. XLM is more the consumer side of the financial blockchain. Like the XRP is serving institutions, XLM would be serving more consumer products, but all driven on finance. But these things, like this is, do you have much of this stuff? Like if you do, good for you.
No, I don't have too much of it. Like honestly, I was buying it back in I want to say 2017, 2018-ish.
Wow.
On there. Yeah. I've been researching crypto for a while, right? And it took me a few years to actually get involved and purchase and then see what the communities are all about and things like that. But
Mm-hmm.
yeah, XLM was always on my radar because one of the things that's actually happening with XLM right now that people don't know is that it's already being tested like live, right?
Mm-hmm.
The people in Ukraine, right, like that are affected by the war that's going on and stuff like that. Like low key, they receive like a UBI, right, like a universal basic income,
Mm-hmm.
but it's actually done through the XLM and the Stellar network. And
I didn't know that.
Stellar, yesterday, I think the CEO or the person in charge of PayPal's blockchain division,
Mm-hmm.
he actually went on board with Stellar as well yesterday.
So, did it, just out of curiosity, what are they? So the UBI is paid in their currency, or is it? But and it operates off the XLM blockchain.
As far as the currency, I'm not sure if it's actual XLM, but I know that the payment is operating on XLM.
It's probably in their currency, but operating off the chain. I didn't know that. That's pretty cool. If that isn't a real world example, I don't know what is. Right, operating that in a war zone.
Yeah, and you got to think, you know what I mean? Like, blockchain has a big interest in the Ukraine and some of the land over there. All those things that are going on, they kind of promised to build back Ukraine, right? And I would imagine that would come with the financial infrastructure. So I think that's what we're going to start seeing next is bigger announcements of like BlackRock being involved in XRP and especially XLM. And yeah, they have like a whole constellations network over there, like DAG, XLM. There's a few other ones,
Wow.
but yeah.
So this is actually really interesting. Let's just throw Fibs on here just because we can. So there was 618. Price pulled back. Actually came all the way back to 7, like literally wicked 786. But there's your double bottom. So your retrace was a little harder on the weekly than 618. Which happens, right? It's not always exactly to the penny. But this little double bottom here is quite telling, right? That's what you'd be looking at. Five EMA went white, which shows us the money's coming in. So these things have just really gone parabolic, and there's a few others. I think H bar is another one.
Yeah, H bar is doing really well. Really, if people want to gain like a good insight of like tokens to whether hold long term or trade in a sense, not financial advice, right? Just take a look at what World Liberty Finance is getting into, right? Or the Treasury for the U.S. as well with that Bitcoin reserve, right? You just load up on those, should be good. You know what I mean? Long term, not financial advice because anything can happen, but for the most part, those are sound,
Yeah, there's obviously people have to do their own research. I'm fascinated by the technology and in this space. Like I think the value, for me anyways, from my 30,000 feet, the value is in what the blockchain can do, the value that it can add and create, how it can take cost out, how it can save time. That I find fascinating, right? Like there's so many ways to use it. Are we all the way to bright on it yet? I don't think so, but we're closer all the time. Like the use cases that we struggled to find years ago, that's not the case now in real projects, right? The use case is actually very clear. And years ago, that was something that I could never find. It was a good use case. Now you can actually see it, find it without looking for it. So we've made progress. Slowly but surely, there's been progress. The privacy stuff too, I think, is fascinating, right? On how, like, whether it's Monero or anything else, like when you go to the store, when you go to the grocery store, do you open up your wallet to show the cashier how much money you have inside and then pay her? No. You just use your bank card or give them the cash that you have, and you don't disclose how much is in your wallet. Sounds reasonable. But in this space, if someone has your wallet address, they know how much money you have. And that is, I don't really like that. I don't think a lot of people do.
Yeah, if they found my wallet address, they'd be like, God damn, how you so broke, bro? How do you... You got dust in here.
Yeah. But anyway, so it's like there's all kinds of things that are like, what you guys are able to do with smartdefi.com through real world assets and tokenization of those assets. And like that's a use case that, you can have a conversation around now, which you couldn't before. Meme stuff, still not really interested, but for real technology and real solutions, yeah, I have all the time in the world for that stuff.
Absolutely. Right. Things that create solutions will always have long-term value, Yeah. That's the way I look at it. Definitely. Yeah, back in the day, people would just be like, yo, what's the point of crypto? Like, now people are seeing what it is and how it can function on a day-to-day basis, right? Mm-hmm. In the use case of it in a real-world application. And I think it's going to continue to grow, significantly in this year specifically. And I think if it continues up by the end of the year, if it's still going by the end of the year, we could very well see it into like spring of next year.
I don't like to make predictions like that. I just want to kind of follow the chart in real time. It'll tell us when it's going to change its mind. This is the BNB chart, and look, it's done kind of what you would hope it would do, right? This move here, there's your wick off the lower value range. So the takeaway today, when you see price starting to move up off a lower value range, that's a really good buy. That's a good long, 9 times out of 10. Here's another example. And what do? You break out and you take out the previous wave's high. Right? That's what you're hoping to do on this move higher. Right? You want to take out that previous wave's high. And then you do that, and you're looking for the next one. What you got? So with every one that you take out, you just keep looking to the left for the next one.
I just had a quick question.
Sure.
When you say the lower value range, what is that specifically?
The lower value range on the point of control. So this thin blue line here,
okay,
is the lower value range. This thin blue line up here is the upper value range.
And that's another specific indicator, or does that come along with the point of control?
It's within the point of control.
Okay.
And then it's within the volume profile. The point of control here is as the average of all of that. Right? It's the averaging of volume over time. Right? It's showing you where most of it's been at this level here. When it averages out, this is the lower range. That's the upper range. So I like this move that it got off of here. I like this big impulse down and basically a snapback. And look, points and flats on shorter time frame, shorter time frame indicators like the 5, for example, because it's shorter, it reacts quickly to price, and it shows you this in a point. That point is indicating a change in direction. This is what you would see, right? that point is indicating a change in direction. We're even getting a little bit of an additional clue by it showing us that it's gone from red to white. Money going out from money coming in. That's your early cue, and there's your confirmation that price is moving higher. But
is that an example of your points and flats?
Yes, it would be. Yeah.
Perfect.
Yeah. And you know, the shorter the time frame, the more violent they can be, because the price action will be picking up. Down here on the left. So you're going to see a lot down here, right? On this one. You get, obviously your move down, but here you go, your 5 EMA goes white, then you get a confirmation candle. Like, this is just pretty simple way to follow, right? The question you always get from people, how do I know when to get out and how do I know when to get in? Right? That's reasonable. We're all asking ourselves the same question. We really are. So if you look at the right side of your chart, and that's what you'd be looking at on this 1 hour Bitcoin, that might be an opportunity to consider taking a long. Because at the end of this, you know, you're kind of at the end of the curve there, and all of a sudden you see that white line shoot up. And it's diverged and it's shooting higher, which tells you price wants to go higher. Just little cues like that. And then from there, we're in early. We just go for the ride. There, the divergence is still, you know, your T line and 5 EMA are still apart. So you have the knowledge to stay in the trade. How many people on this red candle would say, that's it, I'm out? Right? How many? You got this nice move higher, you've consolidated here for too long, my money's at risk, and then this candle shows up and you're going to sell. Completely reasonable to do that, by the way. But the chart does tell you that there's more gas in the tank. The chart did not capitulate here. It was still a bullish chart, and you get 3 more green candles on top of it before you break down. Nothing wrong with taking your profits here at all, but just understand that what you're looking at on the chart all the time. This is just retracement action in an uptrend. There's where it breaks down up here. Our goal is to get you at the right place at the right time so that you can manage the trade effectively without having a heart attack. Right? So that's all. That's basically what we want to do. And look, this is a bullish chart, and it's still bullish. Right? Just because you get red candles doesn't mean that price is rolling over, right? There's other metrics that you can use to gauge whether you're going to break down or not. Still a bullish chart on the daily. And time frame is everything, by the way. Right? Like, you can have 2 people looking at the same asset, and one will say they're bullish and another one will say they're bearish. But when you peel back the onion, you have to ask, like, okay, over what time frame? Oh, well, this is a longer term swing trade. Oh, well, that explains everything, because I'm short this retracement, but it's the same asset. Like, so, perspective is important, and you can have 2 different opinions on the same asset. That's not craziness, right? That's totally normal. Let's take a look at something I haven't looked at in a million years, Pepe. It's taking its beating, right? is our job is to monetize the chart. And this is a real good example of some nice swings. You can swing trade spot. You don't have to use leverage all the time. Right? There's nice moves in here. The trick is just knowing, you know, if you're trading spot, just picking the right times to buy. That's why this stuff's important. And I know that each and every one of you will have a friend that says, well, every time I buy, stock goes down or the token goes down, whatever it is. That's because they just don't understand where they're buying. It's not that hard. You just bought in the wrong spot because you don't know how to understand how to read price on a chart. It's not your fault. You have the ability to learn. So that you're not the guy buying up here. Just because group speak got a hold of you and everyone in your circle is all pepe'd up. So you pepe up. But you did it at the top. Right? That's what group speak and all that stuff does to people. Following, listening to different narratives. Just read the chart. That's all you got to do. Just read the chart. Is it interesting to have those conversations? Yeah, sure. But at the end of the day, the chart tells you what the market thinks. Right? The chart tells you what the market thinks of your business. No matter what you think of it, the chart will tell you. Here's an advertising agency conglomerate. That's a hell of a haircut. From 106 to 71. Does the market love this stock? Answer honestly, does the market love this stock? No. It hates this stock right now. I don't know why. I don't care. Neither should you. The only job you have is to, at this point, would be to short the damn thing. Charts don't lie. People do. This has no sign of breaking the downtrend. And because, you know, we only show this 20 times a session, here's an example of a failed breakout that will roll over and likely take out the previous wave's low. In all of these, green candles in a downtrend, green candles in a downtrend, green candles in a downtrend. They do not break trend. They are not breaking anything. And yet, these are the things that stress people out so much. What is stressful about this chart? Honestly, unless you are running the company. What's stressful about this chart? If you're short, nothing. What's the problem? Short the damn thing. Price going down? Yeah, short it. Price going up? Long it. It's not hard. But every day, someone's confused about something. Why is this happening? How come this is going on? I don't know. I don't care. Blunt, where do you think this thing's going? 288 or 268 rather. Okay, there's the number. Where do I think it's going now? 200. Why? I'll show you. Because I believe in my charts, and I'm not afraid to tell you that I believe in my charts.
I believe I can chart.
So here we go. So there's your 1,000-day MA, and there's the $200 mark. There's the tag of these two skis, for lack of a better explanation, and a bench of past price to the left. Just pull out UNH weekly. Here we go. Another failed breakout. Like, come on, guys, we show this all the time. Price goes up. This time it wicks the T-line and runs away like a scared little girl. And at every single week, it closes below the 5 EMA. And it's going to roll over, and it's going to take out this previous low. And ultimately, I believe it's looking for this. Now, it might take a few weeks to get here. Right? And someone's going to say, well, if you keep saying that long enough, sooner or later, you're going to be right. Yeah, bullshit. You believe so much, you show me you can do it. Show me that you have the belief in how price moves. And if you do, great. I want to talk to you because I want to talk to people like that all day long. But if you don't, then shut up. Nobody thought it was going to go to 268. Well, hell, there it is. You know, for the handful of people that could see it, thank God you're alive. Right? This is a perfect example. At no time has price told you that it wants to break out here. This is just a feeble attempt that fails. And I do believe that this thing will continue to roll over. Not financial advice, just a personal opinion based on 25 years of staring at these things and watching how price reacts.
Hey, Blunt, could we look at DMC? I don't know if you looked at it earlier today, but
there you go. Okay. So, what do you not want to happen here? So, we know that this is an upper value range, right? We know that with the point of control being down here, that there's a gap. So you don't want this thing to fall into this gap. Because right now, like, you don't have a sell signal yet or anything like that, I understand, but this is starting to look like maybe a failed breakout. You move up, you hit some resistance here at the upper value range, and then price starts to roll over. If it continues to fail, it's going to look to take out the previous wave's low, which starts to get you into this volume gap, which will have a hard time holding price up. And it will probably look for a bench of past price, either in and around these two bottoms and this kind of top in here, or right back to the point of control, and perhaps the 1000 MA comes in here and provides some support. But this is the risk to the downside. Yeah. That's the weekly chart, and I think, when trying to establish trend, you got to look at the weeklies.
Was that in reference to the crypto project, or I didn't want to cut you off during? I mean, that was pretty cool.
This is your buddy's business, isn't it? Or your friend has some.
Oh, I'm sorry.
His buddy has some money in this, I think, or something like that.
Oh no, I was the DeLorean token.
DeLorean. So, am I in the wrong stock then? What is it?
Yeah, it's a cryptocurrency. It's DeLorean DMC. You know the car company?
This thing. Okay, my bad.
There you go.
Okay, so
no, the other one was pretty cool too to watch. So yes. No worries.
It's all a learning, right? So this is the 4 hour. There's not a ton of history here. This is Binance, but the point of control or the volume profile doesn't even come up. Let's go to it hourly. That might do it. There we go. So, it got kicked in the teeth pretty hard, but, some support along the lower value range, and the breakout, although kind of volatile, has been strong enough to hold. Really what you want to do is, you didn't quite take out this high, right? Look at the closes. They're essentially equal. So I think you have to take another run at this level, on this time frame anyways. This is the hourly. I just wanted to see where the volume profile was here, because see this gap to the upside? You want to get in, you want to get price in here again to get it to push. If it fails, you can run Fibs on it. That'll help give you, I hate to say it, but that's the low. So that would give you an idea of a potential retracement in and around 00494, something like that. That's 618. So you're, and how, so this, I don't want this to be conflicting. So here you have your fibs that if this was the high of this wave, has 618 back down at this level. Totally relevant, totally legitimate. At the same time, I want you to understand that because this divergence in the T line and the 5 EMA is still intact, that it is still a bullish trade. So yeah, I connected, the swing low to the swing high, but this wave itself at this point is still bullish. If this thing then rolls over, then yes, that was the top. But I just want you to understand, if we didn't have fibs on here, we would be saying that this is still a bullish chart on the 1 hour. Was that too much? That was a lot, wasn't it?
No,
Sorry.
That's
What'd you do today? I listened to a stream, stole a car. Just a fun day.
to buy the dip, right?
Yeah. Yeah. So in crypto, it looks like all of the ISO type related coins, or the ones around finance, are getting some love. Where is it? Who has another ticker we want to look at? Did we look at Soul today?
I do have a
AG.
DAG?
Yes.
Is that a crypto?
Yes.
Here we go. Okay. We must have looked at this before. So a nice base here. So if you were looking to go long, this obviously would have been a great opportunity to add. And you're finally getting a breakout. So this, what you're seeing here, this thin blue line again, is your lower value range on the volume profile. That's where all of this price is basically getting held up on, and that's a good thing. And now you're, again, right, you can start to see the money come in because your 5 EMA went from red to white, and then the following candle you actually get your confirmation on, and then it's pretty clear, right? This is a bullish move. This divergence, the more that there is, the more momentum higher there is. So this is a nice little pop. And it's looking like it's kind of going a little bit sideways here, but I don't feel that's necessarily going to be a bad thing. This could go sideways and then boom up again. That's what I'm thinking might happen there.
That's a nice looking chart.
Yeah.
Do you have the 20 and the 50 on there too?
I can add it real quick. Thanks for asking that, because I always want to know. There you go. Right. So
That chart wasn't looking so nice 2 months ago.
no, like probably felt like you're in a bit of a free fall, but it was nice to see it base, right? When it bases like that, that's like catching your pants on the cliff, right? When you fall off. But that's a nice bench there, and you're getting a break of the 50. That's, and you're trading, and you held it. It's not like you popped above it and then completely fell and capitulated. That's not what it did. So that's bullish in quotes, right? And all of this stuff is for now, right? It's bullish for now until, money leaves, right? There's the 4 hour. This is why we do multiple time frame analysis, right? We want to see stuff like this. Let's take these candles off one quick second. So where do we often find areas? Remember we've showed you this before, where these tops often form. So it's not always price that double tops. Since I've been using this methodology over years, I've noticed that my short-term indicators like my 5 EMA will often show me double top and double bottom signs. So I don't like, you obviously don't like this candle, right? So, but what happens if it rolls over? So here's your breakout attempt, you roll over, and eventually you're going to look for the 20 in this case, and or take out the previous wave's low. Now if it does pull back and it sticks to the 20 and gets a continuation, the expectation would be that it would take out this high. And this is kind of just that ebb and flow of the market that we're talking about. Just being able to allow the chart to tell you without, having a convulsion when you see these big red candles. Although I don't like this one. And when you look at, so this is the 4 hour MACD of DAG. This I don't like. So this is your moving average and signal line on the MACD. And obviously they're well above zero, so that's been, it's been in bullish territory. But I don't like how it wants to cross down like this, because whenever I've seen that, it's usually has some momentum behind it. So, and these are just the little cues that we, our charts tell us from time to time that we pay attention to. And it doesn't matter what we're looking at. I'm going to go to YM again because it's the Dow, right? The contract for the Dow, and it allows me to use the volume profile. And we looked at this chart on Tuesday as well. What did we talk about on Tuesday? I'll remind everybody. We were looking at this candle right here, this red candle. And we talk about all the time that when price comes back to meet the 20 MA, we have a couple things happen. We typically, we've broken down here, so this is a fresh start. This is our first attempt. We typically bounce. And what do? We bounced. Right? That was yesterday, here's today. So we were talking about this in real time. We roll over, do we get a continuation off the 20? That's what we spoke about. Or does price break the 20 and then look for the 50 to the downside? It took option 1, right? Continuation from the 20, continuation from the 20, continuation from the 20. What are we thinking may happen here? And notice that we actually never got a sell signal in all of this. So even this pullback here never triggered the 5 EMA down through the T line to trigger a trend change. It did not do that. It just bounced off the 20 and moved higher. So my expectation would be is that it's going to look to take out the previous wave's high. Does it make me feel comfortable that's doing that? No, not really, because I think every day we move higher, we run the risk of a greater pullback to the downside, but that's another conversation. Right now, that's what it does look like. And for further confirmation, what do? We just shorten our time frame a little bit to go to the 4 hour just to help us determine whether or not we might be on the right track. And I think we are, right? So far, we avoided this big gap to the downside, and that was a huge risk. Breaking out of the 50 here, again, it's a 4 hour chart, so it's got to hold, right? But there's your first attempt. There you broke it. There's your first attempt. First attempts typically fail. The second attempt looks like it wants to break through. If it does, it's going to look to take out the previous wave's high. And I don't have to explain to anybody what would happen if you pulled back and fell into that gap. If you want to look for ranges on the way down, well, we can just simply start to throw in some of our MMAs to give us an idea, major moving averages, on where price might go. So here we are trading well above the 20, the 50, and the 200. This is the 100 MA I've just added in here because I knew that price was trending along it. You broke the 20, you found the 50. You broke the 50, you're going to eventually find the 100. If we don't hold the 50, you're certainly going to come back and test this neighborhood in here between the 20 and the 100. And if you break it, well, you're going to take out this wave, and then you're into the gap again. But these are your targets. There's the 200 MA, right? Kind of where this big move took off from, really. So if you lose this level, you have to start to look for the 200. And it's a matter of, if it were to roll over, price and time coming together to meet. Sometimes price moves really fast to get there. Sometimes it just chugs along. But they'll find each other.
And Blunt, that's the Dow? Is that what you said? The YM1?
Yeah, so YM is the E-mini for the Dow. So if you were to trade futures contracts, right? YM is the Dow, ES is the S&P, and NQ is NASDAQ.
Nice, thanks.
Okay.
I wanted to see it, as he brought up the DAG chart. I saw the bottom. I was holding on that support there. Don't judge me, but I had a coin in the bag that a little gorilla wants me to check. It's Skibidi, if you got a second.
Sure. What is it?
Skibidi, SKIBIDI.
SKIBI.
USDT pair.
Is that it? I guess.
Yes.
Okay. So what are we doing here? What are we doing here?
I just saw that similarity on the 4 hour, and I was just thinking about the previous chart.
Yeah.
It's a lot going on.
Yeah, this is pretty volatile stuff. Like it pops around
Yeah,
like crazy.
yeah,
but,
for sure.
But yeah, I totally see what you're saying. This is, and again, it doesn't matter the asset or the time frame or the market. Like you got a nice base along here, and price responded accordingly, but it's bounced around everywhere. Like this is really hard to gauge.
Yeah, 100%.
The 12 hours a little cleaner. And what we're doing when we adjust the time frame is it's just another opportunity to filter noise, right? So, the 4 hour looked a little nutty. So what do? Try and take the noise out of it and go to the 12 hour where it might smooth it out a bit. Right? So here's your 200 MA red on the 12 hour. And it's been support and resistance several times. So it's pretty relevant. And this is where your little bounce came from. And it's interesting, you have a move up, you kind of fail the 50 up in here, and you pull back to the 20 and you bounce. And, if you were to roll over, you're looking for support to be back down here again. Just look for benches of past price so if you look through the tops of these candles, they cut through the middle of all of this, including some other tops. So it's just a reasonable place to think that it might want to sit down. That's all. And the Fibonacci's help us with that a little bit too. Right? So where's 618? Right where we just said, actually, in that area that cuts across these bottoms of these candles, because it's a place where price may want to sit down. Like there's no magic to this, right? It's like, for me, it's okay. can I average out all the price in here? And is this a bench? Like a structural bench? Yeah, it is. Ironically, it lines up with the fibs. Doesn't happen all the time. They'll come close, but it just gives you another validation that hey, I'm on the right track, right? You got to know where you are on the field at all times. Right? Where's the ball and where are you on the field? And just understand that, you can be in this trade and you might want it to go up. You might want price to go up so bad, but at the end of the day, the market doesn't care. It's going to do what it's going to do. And you have to understand that in order to be effective, you're either going to have to sell it or, lose your money. So be indifferent to price. That's, one of the biggest rules. You don't care if price goes up or down. You simply just want to be able to monetize the chart effectively, right? That's what you want to be able to do. Don't, put your bias aside. If price is trading on the north side of the T line and the 5 EMA, chances are you're bullish. When you get too far away from those levels, like you did here, right? Price doesn't like to get too far away from the 5 EMA, and when it does, it comes back to it, right? Here's this little gappy area. Ugh, that's uncomfortable. It doesn't like to be too far away. It wants to come back to it. So this is an interesting chart for sure.
Thanks for that, Blunt.
Yeah. It's really hard to read some of this stuff. Like it's either going to pop or drop, right? So.
Yeah, I'm trying to introduce them to Smart DeFi. Don't worry.
So there's, it's interesting. You're going to have some stuff on days that, is all red, and other days, something's taken off. This is Monero. That's a pretty bullish chart, a pretty healthy chart. Look at the volume gap that was created, right? And that's created from this big move up. That's kind of why I'm showing you guys this. So here's all this consolidation. There's your green candle right off the 50-day moving average, and then thing just went straight up. And at no time since April did you even have to think, till the end of May pretty much, about taking any off or closing that trade or whatever you were doing. Because all you did was take a clean signal, and you have no idea what one candle brings after the next. You're just following it all the way up. But here again, like, you're on the north side of the 50, you're on the north side of the 20. Those are all bullish things. You're still under a buy signal on Monero. And if price breaks out, it's going to want to...
That thing's looking to rip tits right there.
Yeah, like I don't want to be too bullish here, but it may want that high, right? Like that's significant. But this is one of those things that is vulnerable to, regulation and so on because of its privacy element. But I don't know. I kind of believe in the fact that you should be able to keep to yourself how much money you have in the bank. I don't know what's wrong with that. But those,
Right.
the ISO,
Right.
the ISO coins are popular. I think the privacy things will also gain popularity over time as well. But that's just speculative stuff on my part. It's not technical, right?
I mean, technically it is, because you take an overall view of things and you analyze it from a technical perspective, especially with how the technology functions. So, could be a technical analysis, right?
Yeah, and this area here, the reason I dropped this horizontal line is because I just wanted to identify this bench, right? This little bench here of past price. Because in the event of a pullback, it will be relevant. And when you throw on your volume profile like we have, you'll realize that it's actually the bottom of a shelf, or actually it's kind of the middle of a shelf. It's because it's in here, but it's a very relevant point. And we'll leave these things here to see if price comes back to tag them, just like this horizontal line that we drew ages ago on Bitcoin, right? We drew it back here, 27th of May or something like that, or 25th of May. And at the time, we said, let's see how relevant it becomes for support and resistance. Well, there was our first test. And then look what we did in here. Right? There's your bench that you created along this level. Damn right it's relevant. Do you think it's an accident that this happened, or that we're just really shit lucky? No. It has nothing to do with luck, right? It's just how price behaves. This is a real nice move off the 4-hour. Love this. Boom. And this doesn't look much different from the chart we just looked at on Monero, where if this does take another run, it's going to want to run at that all-time high, right? It's going to make work of this, no problem. But this is what it'll really want. And it's just a matter of the ebb and flow of the market. Price is moving higher. What's it going to look for? Previous wave's high. Structural resistance, anything like that. All right. Any other questions, guys? Looks like the stock markets just don't want to take a break, so c'est la vie. And here the 10-year that was down today is now green. Yeah, so that thing that nobody wants to talk about is now green again. And I think this is really important. This is just my opinion. I don't want to overblow it, but I think that this is a real significant signal. I wrote a Substack on it today. I encourage everyone to read it if you can. You can even see it on, there's a link on X if you wanted to get to it. But it's basically a technical overview on why it's going to 5 and up. And what it means when it does to everyday people. So take an opportunity if you can and give that a quick read. But we know what happens. Nice move up. We go sideways without any breakdowns. And in fact, there's the 20 MA that's giving us our love, and we're getting support right off of it. So doesn't mean that we don't sink a little bit here and there, but I really believe that's what we want. So if we don't have any more questions for today, we can wrap this up and come back on Tuesday and see where the markets have left us, and get an idea of maybe where they want to go. But right now,
I have what may seem like a real dumb question.
no such thing.
No, it's only a question asked at the wrong time, right? How do you put that little yellow line that you put
Here?
on the monitor there?
Yeah. So yeah, sure. There's all that is just a horizontal line, I believe I'm using. That's all it is. Yep, that's all it is. I had just changed the color of this one, but that's all it is. So what you're doing, take this off. So along the left-hand side of your chart, your second little box there allows you to add a trend line or vertical lines, horizontal lines, all that kind of stuff. What you're looking for is just the horizontal line, or you can use the horizontal ray, which just does this, right? It just goes to the right and not across the entire screen. That's all. That's all you do. And then you can change the color and all that kind of stuff.
Very well. Very.
Super simple. That's all. Yeah. Most of the TradingView tools are easily accessible and easy to use, right?
Yeah, that's helpful for showing the past levels of support.
Absolutely.
And, I noticed in the little gearbox on the bottom right of the chart, you can actually add a plus button, and then that'll help you make that horizontal line.
Yeah.
It's just another way, but yeah, that's good. Thanks.
Yeah. So yeah, here's your 4-hour Bitcoin again. So what we were showing is that you can see this is a bullish chart. If it breaks out here and continues to move, it's going to want this up top there. So I don't think we're done talking about all-time highs. I don't know what the market will do when it's not talking about all-time highs with Bitcoin. I don't know how it will digest that. But right now, that seems to be the topic du jour. Right? You can see why. It was, again, nice continuation off the 20. So this thing means business. It's not done yet. Yep. All right, guys. Well, why don't we wrap this up? We will get back on Tuesday of next week. And if you wanted to see any of these presentations that I have, I do these to clients and to some university classes from time to time as well. But if you want these decks, I'll make them available to you, and I'll just send you a link, and you can read them anytime you want. So anyone you want, Fibs, Fractals, filters, or the ones about Mandelbrot and Bachelor, whatever you'd like. So until next week, we will see you a little bit later, and have a safe weekend, everybody, and we will talk to you next week.